If you're watching uranium stocks, you're probably seeing headlines like the price of uranium's jumped 5% because of something that happened in Kazakhstan, or it fell because of something that was said in the United States. What a lot of people don't realize is that the price of uranium that you're following may not actually be the price of uranium, and it may be very misleading in a number of ways. I'm going to talk today about those 4 attributes that people really need to understand about the price of uranium if they're investing in this market. First attribute that people need to understand about the pricing of uranium is that the market itself is fairly illiquid, which means that it doesn't really trade a lot. When I say not a lot, the average number of trades a week last year in 2024 was 7 trades a week. And each of those trades was less than 100,000 pounds of uranium, which is not very much uranium. To put that into perspective, the London Metal Exchange will do 195,000 trades of copper in a single day. So when we say 7 trades a week, we really are not talking about a whole lot of trades. Now, why does that matter to investors? It means that any particular trade that happens can have a very distinctive effect on the price of uranium. And it typically isn't uranium being bought to put into a reactor. So what we may be looking at is not a sudden shift in the demand for uranium or the pricing of uranium, but in fact, we may just see a fund offloading a position. The second attribute that people need to understand about pricing is that 60% of it is done off market. What I mean by that is that we don't get to see what the price of that uranium is and what it was traded for. There is no central exchange for uranium. So in fact, all of these transactions occur between a producer and a utility that might own that reactor. And the terms of those arrangements are not made public to the rest of the world on an ongoing basis. Now, there is some partial visibility to some of this pricing. We do see a number of these contracts are put out to tender, public tender, so we get to see what those prices are. We will hear through earnings reports from Cameco and Kazatomprom what those prices might be. But all in all, what it means is that we really are only seeing 20 to 30% of those transactions. The bulk of it, again, is just not visible to us. What this means to investors is that they're really only seeing a sliver of the pricing. We're not seeing all of it. Maybe 10, 20, 25% is all the pricing that we're seeing. We're not really seeing the action in the underlying market that's being carried out by those utilities that are actually putting uranium in reactors. So in fact, the uranium prices that you see on charts is really just the tip of the iceberg. The real bulk of it is happening under the water where we don't get to see what it is. The third point that investors need to understand about the price of uranium is that most uranium is bought through long-term contracts. These utilities, when they are looking for fuel for their reactors, they're looking out a number of years. They're not just buying on spec from year to year. These contracts will last anywhere from 3 to 10 years. They lay out a number of complex terms with regards to escalation pricing, floors and ceilings, delivery times, all in all to protect both the buyer and the supplier over a longer period of time. But do understand that the uranium that is currently being consumed and paid for today was probably contracted 3 or 4 years ago. And the stuff that's being contracted today will not hit the market until it's delivered 3 or 4 years from now. Historically, what we're looking at is about 90% of all the uranium that's being delivered is being done through these long-term contracts. And it makes a lot of sense that these utilities do not want to be relying on short-term contracts where they need surety of supply in order to make sure that those reactors are consistently running. What this means for investors is that if you're watching the spot price, you're watching the wrong numbers. You really need to get a better handle on the underlying contract pricing and where it's heading. If all you're watching is the spot price, it's like watching the price of tomatoes at a farmer's market in order to predict the future of agriculture around the world. The fourth point with regards to pricing is to realize and never forget that the spot market really only makes up about 5 to 10% of the overall transactions that occur in uranium. So when you see a headline that says that uranium is up 5% this week or it's down $2 next week, remember, you're only really seeing a sliver of what's going on out there. The spot market does not really reflect the uranium that's being put in your reactors. It's being bought and sold by funds and by producers and by utilities that are managing their inventory. It's being bought by traders who want to maybe buy it forward and sell it into a future market, but it's really a small piece of the action. So why this all matters to investors is that you have to make sure you're watching for the right numbers. Remember, you've got a commodity that is very illiquid. It's trading maybe 7 times a week. You're looking at a commodity where most of the trades are occurring blindly to us. They're behind the scenes and we don't get to see what those trades are. You're looking at a commodity that is primarily bought and sold through long-term contracts that will span many years and are priced in a variety of different ways, and which leaves you with 5 to 10% on the spot market, which is the only sliver that you get to watch and trying to gauge how things are happening in this market. If you're an investor trying to time this sector, you have to understand what the price is. Don't chase the headlines. Don't chase the spot price. You have to watch for the clues behind the scene as to what the actual price of this commodity is doing from day to day. And you're only going to get those clues by watching contracting, tightening of inventories, geopolitical issues that are affecting supply chains. These are the clues that you need to follow in order to really understand what the underlying price of this commodity is. If you enjoy this video, please make sure you watch these.